For first homeowners out there, understanding what schemes you qualify for has to be one of the biggest problems we see on a day-to-day basis. I got a call from Ross recently who had no clue what he qualified for, and even when he talked to his bank, they didn't even tell him some of the schemes that he actually could go for. So today, we're gonna run through all the schemes you need to be aware of, including the number one tip we see a lot of first homeowners making a mistake on, which is the home buyer sandwich, where you can sandwich up a bunch of schemes and grants together. But let's start off with Ross's story and talk about what happened to him. He called me up recently and had talked to his bank, who said they couldn't assist. They said he needed a larger deposit, plus to be in his job for 3 months and pass his probationary period. You see, Ross's bank wasn't a participating lender under the home guarantee scheme, which meant they needed greater deposit requirements, plus weren't able to assist if he just started a job. The good thing is, with the schemes that are available and the schemes we're going to go through today, we're able to help Ross out with not having to save up an $85,000 deposit, but he could work with as little as 55 grand deposit, saving over 30 grand in lender's mortgage insurance, and still get a loan even though he was subject to probation. Today, we're going to run through all the things you need to know so that you're not going to be in Ross's situation, so you don't end up in a situation where you miss out on any schemes or grants that are available to you. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content. We hope you enjoy. So Jaden, let's kick things off and talk about some of the schemes and grants available to first homeowners that they might not be aware of.
The three big schemes that home buyers can take advantage of at the moment are the home guarantee schemes, which we can go through in detail in a sec. There's stamp duty concessions, depending on the state that you're based. And there's also the first homeowners grant, which is a lump sum of money that the government actually gives you. So let's start from the top on the home guarantee schemes. It was previously known as the first home loan deposit scheme. Now it's FHBG. It's a scheme where pretty much the government acts as your guarantor. So it means you can buy a home with a 5% deposit and not have to pay any lender's mortgage insurance, which would generally cost you tens of thousands of dollars. Like Nathan said, in Ross's case, it was almost $30,000 just in lender's mortgage insurance that gets added to your loan. You're paying interest on that. You have to pay it out from the loan. If you ever sell the property, it's there forever. A subset of the same home guarantee scheme is the regional first home buyer guarantee scheme. So it's exactly that. It's a similar scheme. It's the 5% deposit, but you need to be buying in a regional area. You also have to have lived in that area for at least 12 months before you buy, because they sort of hope that it's more for locals to buy properties in there rather than people, city slickers moving out to the country and sort of buying properties and pushing prices up. And the third part of this scheme is the family home guarantee scheme. So this is for single parents. You can actually buy a home with as little as a 2% deposit. It's pretty wild. It's trying to help people who've been separated, who from broken family, trying to get back on their feet and get into the property market with a lower deposit.
Now, with each of the schemes, they have caps and limits. The home guarantee scheme has 35,000 places, whilst the regional first home guarantee has 10,000 places, and the family home guarantee has 5,000 places.
These places are allocated per financial year. So a question I've been asked is it going to run out? Are there going to be no more schemes at the end of this financial year? So the 35,000 places that are available will end on the 30th of June. But there's been talk that they're going to extend it. And even we've been told that new banks are going to be joining the scheme as a participating lender.
Now, the key with all three schemes is it is a first come, first go basis. So the scheme spots are subject to availability. In a lot of cases, you can get pre-approved under the scheme. So you secure your spot for the next 3 months, which means you're going to have a position as you look to go to purchase during the pre-approval time.
Now, there are some limitations with the scheme. So for the first home loan deposit scheme, the home guarantee scheme, there are maximum price caps. So in Brisbane, it's 700, Melbourne, 800, Sydney, 900,000. So you have to be buying a property under that value. In Brisbane, for example, you can't go 701. It just would not be eligible, and you pay lender's mortgage insurance. So keep that in mind. Speak to your broker or hit us up. We can take you through the different limits, and it's changed on the area as well, depending if it's regional, etc. And also there are income caps. So if you're a single applicant, your taxable income for 30 June last year, so for June ending 2022, needs to be under 125,000. So the good thing is, if you had a really low tax year, you might be a graduate, started your new job last year, didn't earn much, and then today you could be on $150,000. They're not basing it on your payslip today. They're looking at your taxable income, your notice of assessment, as at financial year ending 2022. So that can be one that tricks people up, because then as a couple, you need to be earning under $200,000. And if you had a big year last year, you got a bonus, a big salary, and your income together is over $200,000, you immediately disqualify from the scheme. So there are some limitations. You also need to be a citizen. So if Nathan and I are a couple, he's a permanent resident, I'm a citizen, you aren't eligible. You both have to be citizens to apply for the scheme. And there's some other criteria. So I'll include links below. If you're not sure, if you want to know if you're eligible, hit us up. We're mortgage brokers. We help with arranging the scheme. Typically, the way the process will work is we'll get all your information together. We'll help with the application for that home guarantee scheme. And at the same time, we'll do your pre-approval with the bank, because like Nathan said, you can actually reserve it and hold that spot for 3 months.
Now, one thing we are seeing as we're approaching the end of financial year is a lot of first homeowners might actually be over that cap, over that $125,000 limit for an individual, or over $200,000 as a couple for this financial year. You got to be careful, because if you're applying for this scheme from 1 July of this year, it's actually going to be based on your income that you've earned for this financial year we're in, which means if you're over the limit, you no longer qualify for the scheme. As Jaden mentioned before, at the moment, we're running off financial year 2022. So your income for that financial year is how they're deeming if you qualify or not.
And this could be one that could be worth, if you're not looking at buying until later this year, you could have a chat with your accountant and say like, hey, I'm looking at buying a scheme. This is where my income needs to be. Is there anything I can do tax planning wise? Can I make contributions to my super? Can I reduce my taxable income in any way, through even donations and different things? There's different ways of doing it. We're not accountants. This is general advice only. For that specific advice, definitely worth speaking to your accountant, because like we said, there's tens of thousands of dollars you can save by taking advantage of this scheme.
So Jaden, you talked about the price caps before. So there is definitely price caps. If you're a dollar over any of those caps, you won't actually qualify for the scheme as well. But let's talk about the types of properties you can get under the scheme.
With the scheme, you can use it on brand new properties and existing. So any old house that's been around before, you can use. It's no limitations. It doesn't have to be brand new. You can do it on house and land packages, but you can't use it if you're just buying land on its own. It has to be pretty much ready-made, ready to move in to take advantage of this scheme. And it can be units or townhouses in what they call high-density areas. So previously, if you're looking at buying in Brisbane CBD or Ultima and Sydney, different areas like that, Docklands and Melbourne, for example, when it's high density, there's lots of people there, the bank sees higher risk and they say, no, we don't want to touch it. With this scheme, because the government's effectively a guarantor, you're seeing as lower risk, and the banks are fine to do a 5% deposit using this scheme.
Now, one thing you do need to keep in mind is if you turn this property into an investment property in the future, the government would actually require you to exit this scheme, meaning you'd need to refinance, and potentially if there's not enough equity in the property, then you'd have to pay lender's mortgage insurance. So quite important if you are intending on buying the property to live in for the next 12 months and then turn it into an investment property, that if you're lending at 95% today, you also want to be paying down the loan so that you can refinance effectively, ideally at an 80% lend, so you don't have to pay that lender's mortgage insurance.
Another common question we get asked is, what if I'm buying an existing property that has tenants in it? The tenants might be there till October this year. They're going to be there for 7 months. I'll buy the property. My intention is to move in. What can I do? Unfortunately, under the scheme, reading the frequently asked questions, you have to move in within 6 months of settlement. So if you're settling on the 1st of January, for example, you need to be in there by 30 June, within 6 months, living there full time as your primary home. If it's over that, you're not eligible for the scheme and you need to forfeit your spot. We helped Raj in a situation like this recently. He was buying a property that had tenants in there until August later in the year. So it was about 6 months to run until the tenancy ended. The real estate agent said, yeah, it's going to be fine. You can make the tenants leave early. You definitely can. But once Raj asked his solicitor, there's an existing tenancy agreement in there. You can't kick someone out early. It's just not possible. So the solution was to have an extended settlement. So typically you'll buy a property, you'll sign a contract, and you'll move in or you take over possession of the property within 6 weeks. What Raj did was do a 4-month settlement. So it meant that the tenants were only in there for 2 months after he took ownership and he was still eligible for the scheme. So there are some workarounds like this. Definitely speak to your solicitor. Do not trust anything the real estate agent says as far as tenancies, conditions, and contracts. You need to get your own independent legal advice on that.
Now, you might be also asking, how do you apply for the scheme and which banks are participating? Now, there's 32 banks participating under the scheme. Here at Hunter Galloway, we're mortgage brokers and have lenders that participate under the scheme. So if you are looking at assistance and understanding how to apply, hit us up. We can definitely help.
Interestingly, there are lots of differences between the different lenders. Some of them won't fully assess your pre-approval. Now, we've covered this in other videos. as a bit of a snapshot, when you get a pre-approval, typically a bank will look at your application and say, yep, Nathan has been in his job for a long time, got 2 pay slips, approve it like that. But with some of these small lenders, they don't have the manpower to have an assessor sitting there and going through every single application when you've got a pre-approval. They'll only look at you when you've got a contract to sale. So be careful of this, because some of these small lenders will only do an instant pre-approval. They'll say, yep, Nathan seems like a good guy on paper. No human eyes have looked at it. And then it's not until you find a contract, you sign a property, that they say, oh, wait a minute, he's on probation. We can't accept that income, or is he contractor or different things? So be careful with that. There are some big differences between those different lenders.
I think the other thing to keep in mind is if you don't get a proper pre-approval, it also means you haven't secured a spot under the scheme, because once you get a spot in the scheme, you'll get a reference number and confirmation that you've got the spot for the next 3 months. And that's a problem. If you go through a lender that gives you that coffee shop pre-approval that's worthless, they've actually not secured you a spot in the scheme, which is problematic, because you might find the right property that you absolutely love and then find out there's no more spots, because remember, it's on a first come, first go basis. Jaden, let's move on and talk about stamp duty concessions, and then we'll finish up by talking about some of the grants you might be eligible for. So starting off with stamp duty, what do first homeowners need to know about this?
The biggest one that's come out this year is the first home buyer choice in New South Wales. So this is where instead of paying stamp duty, which is an upfront tax you have to pay to the government when you buy a property in Australia, you can actually say, no, I'm not going to pay that upfront. I'm going to pay it as an annual land tax. Now, this is a funny one. It doesn't really make sense in New South Wales if you're buying a place for under $650,000, because the stamp duty is nothing. It's waived for first home buyers. But between $650,000 to $800,000, it sort of ratchets up to $800,000, where it's pretty much the level it is for most people. So today I was talking with George. He was looking at buying a property in Sydney using the first home loan deposit scheme with a 5% deposit on a $900,000 property. Now, if he'd looked to buy it last year, he would have had to pay $36,000 upfront in stamp duty. Now, fast forward to today, he can make that an annual land tax. So instead of paying that $35,000 or $36,000 upfront today, he can cancel that, not pay anything upfront, but move it to a land tax, which works out to be about $2,500 to $3,000, depending on the property. They look at the size of your land and calculate it manually. So it changes from property to unit, etc. But in his case, his plan was only to hold the property for 5 years. So he said, well, if I'm holding it for 5 years, if it's $3,000, that's $15,000 I can pay versus $35,000. Makes sense. I'm going to do the land tax, the first home buyer choice, and move on and keep that extra sort of 15, 20 grand for my other things, for the furniture, or just to put back into the loan. So it can be a really exciting scheme for that. At the moment, it's just available in New South Wales. There's a calculator online. We'll include the link below, because it really only makes sense if you're going to hold the property for sort of 5 to 10 years. Beyond that, you end up paying more than at the stamp duty up front. So you need to sort of have a bit of foresight, think ahead on what's going to work for you.
And the other con with this offer is if you turn the property into an investment, then the percentages that they calculate actually increase. So once again, in George's situation where you know you've got a short-term plan, that does make a lot of sense. And it also means you can get in the market with a lot lower of a deposit, particularly in some areas in Sydney where rents are really getting out of control. That might mean the difference between getting in the market now or waiting another 12 months to save up your deposit. So I guess it's weighing up the pros and cons and making an informed decision as to what really makes sense for yourself. Jaden, outside of that New South Wales scheme there, what do other first homeowners get for stamp duty discounts?
Yeah, it changes from state to state. I probably suggest having a look at our stamp duty calculator on our website. We'll include in the link below. It can help you work out. You can run a couple of scenarios and say, okay, if I'm buying a property in Brisbane for $400,000, well, stamp duty is waived. I'm saving $10,000, $15,000 depending on the state and the amount. That means less deposit. It means you could potentially get in that $400,000 property in Brisbane with only $20,000.
And the last thing first homeowners need to be aware that they might be eligible for is the first homeowners grant. Jaden, run me through what the first homeowners grant is, who's eligible for it, and how you can sandwich up all these schemes we've talked about to maximize what you might be actually eligible for through the government.
The first homeowners grant is that it's a grant, it's a cash injection of money from the state government that you live in towards your first home. So in Queensland, it's 15, in New South Wales, it's 10, Victoria, it's 10. There's sometimes higher ones for regional areas, but it's available on brand new properties only. So you can't have been lived in before. There are some exceptions for renovations. It has to be pretty substantial. It has to be like completely gutted, brand new, never been lived in before. So where we typically see this first homeowners grant used is if you buy a house and land package, you use it on that. If you bought a brand new unit or townhouse off the plan, if it's never been lived in before, we find people are claiming it for that. At the moment, there's not a lot of construction activity happening, so we're finding it's probably one of those ones that was very, very popular over the last few years, not so much right now. But I have one recently for Fiona. She bought and signed a contract for an off-the-plan unit over 2 years ago. Now, because of COVID, there were heaps of delays and it finally has come up for settlement now. She was lucky enough, because it had never been lived in before, to get the $15,000 first homeowners grant. She actually got the home guarantee scheme because she only had this sort of 10% deposit, which is pretty much mostly of that deposit. And it was under $500,000, so it meant there was no stamp duty in Brisbane. So you can use all three schemes together. It's pretty amazing to do that. The first homeowners grant, it is one of those ones where and people ask me, well, is it worth it? Should I only look for brand new properties because I'm going to get this $15,000 grant? And we saw it a lot with Home Builder a couple of years ago. It was a different grant. But the thing you've got to sort of weigh up with some of those off-the-plan purchases is you're going to have to live and rent somewhere while it's still being built. So is that $15,000 more than what you're going to pay in rent for that 12 to 18 month, in Yana case, 2-year period? Not always. So do the numbers, check it out. And otherwise, you've got the home guarantee scheme you can use if you're looking at existing properties.
And I think also adding on that is, what premium are you paying if you're buying a brand new property compared to an established property? Something you need to look into and think about thoroughly. Here at Hunter Galloway, we get mortgages approved. So if you're looking for a great mortgage broker, we can help. There's no cost for our service and we deal with people Australia-wide. Call us on 1300 088 065 or visit our website huntergalloway.com.au. Fill in a contact form. We'd love to hear from you. Guys, thanks for watching and we'll see you next time.